Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have on the line Lu Zhang, and she is the founder and managing partner over at Fusion Fund. Lu, welcome to the show.
Thank you for having me, Adam.
All right, so for everybody listening, just so you know, this is part of our Milken Global Conference coverage series where we bring on participants and guests and attendees and also panelists and speakers that have participated in the event. And so first thing first, Lu, I understand you've been going to the conference for quite some time now, and you've even been on panels for a bit. So maybe just start with telling us a little bit more about your experience.
Yeah, so I've been speaking with Ken for a couple of years, and I was engaged with interesting panel discussion range from technology innovation to the investment market outlook. Especially, this year, we're facing lots of the short-term, near-term volatility and uncertainty across the market. So we had a really dynamic discussion. I shared a stage together with Robert Rubin, the former Secretary of the State for the Bill Clinton administration, and also a couple other investor fund manager. We were really talking through, the dynamic situation and the challenge opportunity across the private and public market. So it was a very engaging discussion we had in Milken. And also Milken, I think, it's an amazing gathering, be able to get together the business leader, political leader, technology leader across the world, not only United States. And moreover, I really like that they have this combined structure of a public panel, which I was speaking at, and also some closed-door roundtable discussion. Then you are able to have a different perspective and in different setting. And I also got tons of one-on-one meetings. I probably have 24 meetings in 2 days. Was super efficient. People reach out to me through the platform, quickly set up 30 minutes meeting, and also I did 2 panels in 2 days with 24 meetings. It was super productive. If you know me, you're going to understand why I like it so much. I'm a super efficiency driven.
Oh my gosh, you did. I thought that I had a busy couple of days of schedules, but your schedule sounds like it was pretty busy though. Yeah. So looking at, I want to go further into your background and what you do as well. So maybe just talk a little bit more about how you got into finance before we get into, I want to know, of course, about Fusion Fund, but maybe just start with your background and how you got started.
Of course. If you remember, I'm actually an immigrant. I came to the United States in 2010 when I was 20 years old. Before that, I was originally from a place called Inner Mongolian. So I also half Mongolian and came to the United States for my graduate school. So I initially was doing material science research at Stanford, working on my graduate school degree, and later started a company when I was 21, sold my company when I was 24, and it's an AI healthcare company. And later in 2015, that's when I started Fusion Fund. So this year is actually my 10-year anniversary of starting this firm, and we've been focusing on early stage investment across enterprise AI, healthcare, and industry automation in the past 10 years. So now we have over $500 million under management, have a close to 100 companies, mainly based in the United States and a little bit in Canada.
So what kind of trends in AI are you following? Obviously, you were a founder of an AI-based company and that you exited, and then now you're investing in other companies. Like, what kind of trends are you following?
It's a very interesting question because we were investing in AI when AI was called machine learning, when AI was not a buzzword, when AI was not a sexy term. Yeah. So I think for most of people, they recognize the value of the AI during the ChatGPT moment. But we've been looking at, AI as a super powerful tool to really accelerating digital transformation since back in 2016, 2017. So initially, I was very passionate about AI in healthcare. Healthcare is an industry, market size, 20% US GDP. If you look at another thing, it's an industry with the most richest data we have. Across human society, over 30% of the data we have are healthcare related, but only 5% of this data we actually been utilized so far. So it's like golden mine, and we haven't been able to leverage it so much. But now with AI, even back in the days, be able to do more personalization and a digital solution for digital diagnostic, digital therapeutics, and digital biology across cancer, heart disease, and mental disease. So that's definitely one of the major areas we've been focusing on, I've been personally passionate about. Meanwhile, I'm also pretty interested in, technology within AI infrastructure. I know lots of the discussion is around the AI application layer. Of course, that's important. We invest a lot of AI application as well. I don't know whether you ever use an application called Otter AI, OTTR.ai. It's one of my popular company. I heard it's very popular within the journalist community.
Yeah.
So we have company like that, but we also have company focused on AI infrastructure, essentially building cloud infra solution to make AI application cheaper, reduce the GPU consumption, reduce the energy consumption. Energy consumption of AI is a big problem right now, and solve the data privacy issue with AI governance, data encryption, network security, and the last thing, edge computing. Be able to reduce the latency issue and enable the future AI application on the edge devices that you can run AI, integrate AI application in all different type of sensor. So that's the type of company we'll also be investing. We got a couple exit this year with merge acquisition from major tech corporate, and most of the merge acquisition exit we have this year is for AI infrastructure company. I think the future of AI competition is not necessarily only the competition of the model. It's really the competition of the cost. Which AI solution will be cost efficient and also have a reasonable margin to make it a sustainable business model.
Yeah, I think it's interesting. And I want to, another unique vantage point that you have is just working within that early stage startup community. Like, what are you seeing? Like, what does the early stage startup scene look like?
Early stage startup, I would say now it's really one of the best timing to launch a startup. And we're saying, I always tell the team, I was a former entrepreneur, and all my team members, the team we put together is a group of technologists and former entrepreneur operators. So we truly believe you should follow the founders, because founders are the one actually make things happen. It's not VC going to predict the future. We're just collecting data, try to do the prediction based on the data, but who are contributing to all these high quality data points is the founders. So we've been keep close track of the high quality founder. And we found something really fascinating I'm happy to share with you. First, compare with 10 years ago. 10 years ago for early stage startup, it may take them, for example, 2 to 3 years to grow the revenue from $0 to $1 to $2 million. Now we're seeing companies be able to generate revenue within half a year, go up to $3-5 million. We got a company to grow revenue from $0 to $20 million in 1 year. Another one grow revenue from $500,000 to over $50 million within a year. So the growth of the revenue is quite fascinating, including the company I mentioned to you, Otter AI. If you're a pay user, thank you for your contribution. They already surpassed $100 million revenue this year, and they haven't raised any new money since 2021. So let's come to the second point. It's not only the revenue growth is much faster, it's also the efficiency of the capital. Instead of used to be, you have to raise a couple $100 million to generating, 20, 30, or 100 million revenue. Now founder can generating much more revenue with limited resources and capital, and also limited headcount. Not necessarily need to build up a big team. They can just have a founder with some senior engineer and use just a cursor, all this different type of GitHub solution, be able to write code, and also be able to leverage AI agent and also the AI application for lots of automation. So that's another fascinating point we have. And when we look at across our portfolio last year, for the company we invested within the past 1 year or so, more than 2/3 of them have 20 to 40x revenue growth within a year. We're investing early stage. That's a company in the pre-seed stage. So that's really the beauty of the momentum here. Another thing I found interesting, want to share with you is the profile of the founder. There's two types of founder. One type is first-time founder, never did it before. Another group is repeating successful founder. Silicon Valley is an interesting ecosystem that there's a lot of repeating successful founder who already get financial freedom from the previous exit, but they are not satisfied. They wanted to launch a bigger one, but they're also very picky on the timing and opportunity. The opportunity need to be big enough. The upside potential need to be super attractive for them too. Yeah. I was joking, going back to this miserable founder life. And we're seeing a growing number of the repeating successful founder launch their second and third startup right now. They're fascinated by the technology engagement. They're truly inspired and also excited by the current technology trend. So we're seeing a growing number of the repeating successful founders jump back to the game. So that's all very positive signal for us for now. That's the reason I told you early on. It's also a great time to start a company. The last point I want to highlight is the acceleration of the sales cycle. You know, for us, we only do enterprise-focused solution, no consumer. So we're more familiar with how long does it take for a founder to sell a solution to an enterprise customer, even to the Fortune 500. The good news is not only tech company, even the traditional like insurance company, some tobacco company, they're onboarding CIO, CTO, be able to have dedicated budget to give contract and partnership to smaller startups. So instead of you have to engage with them for like a year or half a year to get a couple $1 million contract, you potentially can get a couple $1 million contract within 1 or 2 months. We also have our own CXO network with 45 CTO from Global 1000 company, led by my partner Zhang, who is the former CTO of HP. And we're able to have this quarterly webinar to connecting all this decision maker CTO from large corporate to our founder. And the speed of the matching and engaging and closing the deal is really fascinating. So I hope this is our useful data points for you and also for your audience. Of course, in general, it's still a difficult fundraising market because of the uncertainty on the microeconomy and the lack of liquidity. We're hoping more IPO can happen this year, but it's not happening so far. But if you look at purely on the innovation and early stage side, it's an exciting time.
Fantastic. Wow, it's interesting. And it's really, I like that you bring up the point about like founders that maybe didn't need to start a new company, but are thinking about doing something bigger and better, whatever, just different than what they did in the past. And they're excited about technology. I kind of look at it, and this is just my personal belief, I kind of look at it like they're sitting on the sideline, and then they hear those stories that some of them, like you were mentioning, like growing the revenue to 50 million in like a very short amount of time, or 10 million or 5 million with very little resources, or one raise. And I feel like some of those really talented individuals are out there, and it kind of like the competitiveness, a little bit of the competitiveness is like, well, wait a minute, hold on. When I was doing something, it took this and this. Do you get that feeling at all? I mean, you're on the inside, or am I just wrong? I could be wrong.
Sorry, I missed you for like 5 seconds. What was the question?
I said, do you feel like some of those founders that are getting off the sidelines, that have been, kind of waiting and don't necessarily need to start another company, that they're kind of getting off the sidelines because of some of the competitiveness? Like they see how maybe some of the other founders, and with the new technology that's available, how fast some of these things are moving, and they're like, well, wait a minute, and they kind of want to get back into the game. Do you feel that at all?
Exactly. I definitely feel that way. I remember one of the founder friends, she'd been like working on the close with me for many years. She already take a, pretty high position, executive position in a large tech company. She's like, I'm done with like a startup company. She did 2 companies in the past. Until a year ago, she's like, Lou, I'm like a cat, and seeing this such a fat rat in front of me, and there's a fat mouse, and I cannot help to catch it. I have to do something. And she just resigned from the large tech company and started a new company. Of course, I invested in her first round. So I think on one side is the community, of course, peer pressure, looking at other people doing something fascinating. Another thing is, this is the entrepreneur spirit. This is the beauty of entrepreneur spirit. Especially now, I know there are lots of uncertainty in the market. But on the other side, because of uncertainty, is further pushing the entrepreneur. What is the difference between entrepreneur versus the other people? When you see a big challenge and big problem, typically the first reaction people would have is that, oh my God, what can I do? What should we do for this big problem? Oh my God, all these consequences. But when entrepreneurs saw a big problem, they're like, amazing, that's a huge market opportunity. I can potentially address to and also resolve it, and also build a strong company on top of it. So that's the difference. So I think when there's a very dynamic market with lots of uncertainty, it's even better market timing for entrepreneurs, smaller startup versus with large corporate. Because when there's uncertainty, it brings lots of anxiety. When there's anxiety, there's tons of pressure for a large company have to make changes. When they have to make changes, that's when they have appetite to take more risk to work with the smaller startup. So this is an interesting dynamic where we're very we're very passionate, we're very excited, we're also very cautious to help our founder to navigate this market situation. But meanwhile, we also launched our new fund early this year in January, so we have also dry powder ready to deploy. So we're also actively investing in new company right now.
Amazing. Lou, if somebody's listening to this and if they want to follow up, if they want to learn more about the fund or follow your work, how do they do that?
Yeah, so if you want, feel free to reach out to me at LinkedIn. So if you want to connect me on LinkedIn, that would be the best way. If you want to send your company to me, feel free to do so. We also have approach on our website that you can directly send your company details to us. That could be another channel. Another thing is we are hosting our quarterly office hours. So we really want to have this channel for founder to come to talk to us, regardless whether you're raising, regardless of whether you have questions related to fundraising or not. We want to offer ourselves other resources to founder for them to be able to reach out to and also help them to navigate the very vulnerable stage of early stage.
Fantastic. And for everybody listening, just so you know, we'll definitely put the links in the show notes so that you can connect with Lou. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And Lou, thanks again for coming on the show.
Great. Thank you.